Hello, and welcome to Donut Investment. This analysis is for Hubbell on the New York Stock Exchange as of 31st of July 2026, with a share price of $473. The full report is on donutsion.ca. Hubbell makes the hardware that runs the electric grid, connectors, metering, and grid gear, riding a strong driver of 80 on electrification and data center power, and Q2 was a beat and raise. But the stock is fully valued. It trades approximately 28 times clean earnings against a 23 times industrials rich line, so the valuation ceiling gate caps it at hold on every horizon. Great exposure, wait for a better price. Hubbell makes the physical hardware that moves and manages electricity, the connectors, insulators, metering, and grid communications gear utilities buy to harden and expand the network, plus wiring and controls for commercial buildings. Business quality is a solid 79, and the driver is a strong 80, grid modernization, electrification, and now data center power. The second quarter numbers made that visible. Data center sales up 65%, utility book-to-bill around 1.2, and return on capital of 15 to 16%, comfortably above its roughly 9% cost of capital. The tailwind is real, but so is the price. On trailing clean earnings, Hubbell trades around 28 times, above the 23 times rich line for industrials, which puts the valuation pillar at 40 in the expensive band and keeps the valuation ceiling gate triggered, a hard cap at hold. There is some good news. After the beat and raise, the forward multiple has fallen to about 23 times, sitting right on the line rather than above it, and the warranted ratio improved to 1.27. Disciplined fair value is around $455, so at $473, you are paying roughly 4% over it. No margin of safety. Timing is where the caution bites. A genuine beat and raise was sold. The stock fell about 7% on the print and now sits below its 20, 50, and 200-day averages in a fresh daily downtrend. Relative strength is about 10% behind the S&P over 6 weeks, a clear laggard. So no entry path is open, and the read is wait. A reclaim of the 488 50-day average, or a clean bounce off the 453 support shelf, would restore the case. The medium and long horizons are hold too. The honest move is to accumulate on weakness, not chase it here. Now, the other side of the ledger, rich multiple, bear $415, 12% if it re-rates. Cyclical utility, industrial capex can slow the order book, $1.1 billion NSI integration, plus invent, Eaton margin pressure. Rate shock lifts the discount rate on a long duration name. Now weigh the risk against the reward. The bull case is roughly 18% above today. The base case, the most likely, about 6%, and the bear case a fall of about 12%, so you are risking about 12 to make 18. So, our call on Hubbell, on the New York Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donut Investment at donutsion.ca. The link to the full report is in the notes below. Have a great day.